Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Zhejiang LEAPMOTOR Technology Co. Limited Annual Report. Zhejiang LEAPMOTOR Technology Co. Limited offers a diverse range of businesses and services related to the new energy vehicle industry. At its core, the company focuses on the research and development, production, and sale of electric vehicles, including smart sedans, SUVs, battery electric vehicles, and strategic models. In addition to manufacturing and selling electric vehicles, LEAPMOTOR Technology also provides various supporting services. These include electric vehicle charging operations, after-sales services, and new energy vehicle retail. The company's technical expertise is further showcased through its provision of technical service and development capabilities. Furthermore, LEAPMOTOR Technology has expanded its offerings to encompass warehousing and sorting services, catering to the growing demand for efficient logistics solutions in the industry. With a strong presence in mainland China and international markets, the company has established itself as a key player in the new energy vehicle sector. Zhejiang LEAPMOTOR Technology Co., Limited maintains a market capitalization of 67 billion, broadly in line with the industry peer group. Zhejiang LEAPMOTOR Technology Co., Limited trades at a higher price-to-earnings ratio of 108 times and a higher price-to-book ratio of 4.17 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 78% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth are multifaceted and varied. A significant contributor is the increase in vehicle sales, which has been a consistent trend over several years. The company's expansion into export markets has also played a crucial role, with new models such as LEAPMOTOR Bone, Lafafiv, and D19 gaining popularity among urban young people. The launch of new models has not only driven revenue growth, but also earned the company various awards and recognitions. Product upgrades and accelerated construction of digital repair capabilities have further enhanced customer satisfaction and loyalty. Improved service quality through sub-warehouses for parts and optimized planning and forecasting have resulted in increased first-time fulfillment rates for parts. Strategic cooperation with China FAW, launch of new energy passenger vehicles, expansion into international markets, and establishment of a global sales and after-sales services network have all contributed to the company's revenue growth. Diversified cooperation with Stellantis Group has also been a significant driver of revenue growth. In contrast, there are no explicitly mentioned primary drivers of revenue decline in the extracted summaries. However, some drivers may be related to cost or expense increases, such as increased raw materials and consumables used, employee benefit expenses, and advertising and publicity expenses. The financial performance of LEAPMOTOR International has shown significant improvement over the past year. A notable change is in net income, which has increased by RMB 3.36 billion from a loss of RMB 0.82 billion to a profit of RMB 0.54 billion. This marks a major turnaround for the company, achieving annual profitability in its second year of establishment. The improvement in financial performance can also be seen in the increase in profit margins. The gross margin has increased by 6.1 percentage points, rising from 8.4% to 14.5%. This significant increase suggests that LEAPMOTOR International has been able to optimize its production costs and pricing strategies, leading to higher profitability. The company is indeed generating positive operating cash flow. This is evident in the significant net cash generated from operating activities, which stood at RMB 12.62 billion for the year 2025. The consistency of this figure across different pages and sources further reinforces this conclusion. The substantial amount of net cash generated from operations indicates that the company's core business is profitable and capable of producing sufficient cash to meet its financial obligations. Management is outlining a clear vision for the company's future. Over the next 3 years, they plan to focus on research and development of new electric vehicle models while also upgrading existing ones. This indicates a commitment to innovation and growth in the market. Additionally, management is prioritizing investments in machinery and equipment to support the production of new models. The company's strategy also emphasizes transparency and accountability, as seen in their decision to adjust net profit by adding back share-based payment expenses. This move aims to provide investors with a more accurate picture of the company's financial performance. Furthermore, management is dedicated to maintaining a robust risk management system to ensure the company's stability and success. Overall, management's outlook suggests a focus on innovation, growth, and transparency, all while prioritizing investments in infrastructure and employee incentives. This comprehensive approach positions the company for long-term success and competitiveness in the market. The company's financial activities have been transparent and well documented. One notable aspect is its dividend payment history. According to the records, the company has indeed paid dividends, indicating a commitment to returning value to its shareholders. On the other hand, the company has not engaged in share buybacks. This decision suggests that management prefers to allocate resources towards other areas of growth and development rather than repurchasing existing shares. Concerns about inventory buildup and supply chain disruption. There are growing concerns about inventory buildup in the current market. According to recent data, there has been a significant increase in raw materials and finished goods, as indicated on page 138 of a relevant report. This surplus can lead to inefficiencies in production and distribution processes. Furthermore, analysis of inventory management practices reveals potential issues with managing inventories of finished goods and provisions for impairment of inventories. As highlighted on page 118, these changes suggest that companies may be struggling to effectively manage their stock levels, which could have far-reaching consequences for supply chain operations. That concludes the financial summary for Zhejiang Leapmotor Technology Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.